How do you feel about the shares of Tesla? One of the most closely followed equities on the market right now is Tesla. All through the year, a number of analysts keep a close check on the top electric vehicle manufacturer. Yet Dan Ives, an analyst at Wedbush, claimed that the price of Tesla shares has already dropped. Remember this information. Wedbush Securities tech analyst and Tesla bull Dan Ives said, Tesla clearly is starting to see demand cracks in China and in the US. At a time that EV competition is increasing across the board, Ives lowered his price objective for the company in late December from $250 to $150 to $175. The final straw for the stock was the price reduction that Tesla implemented. Since 2018, Daniel Ives, also just Dan Ives, has worked as a managing director and senior equity research analyst for Wedbush Securities, where he covers the technology industry. Dan has worked as a tech analyst for more than 20 years on Wall Street, covering the software and overall technology industry. He has 16 years of experience as a managing director at FBR Capital Markets and is a well-known technology stock research analyst. He specializes in the enterprise software and hardware sectors, which include cybersecurity, cloud computing, big data, and mobile technology. His research will be primarily focused on electric vehicles and disruptive technologies over the next 10 years, which accounts for his intense interest in Tesla and its shares. Due to Tesla CEO Elon Musk's disastrous Twitter exchange in early November, Wedbush decided to remove Tesla shares off its list of the best ideas. According to experts, Wall Street is responding to the cross-contamination between social media and the automaker since Twitter has turned into an albatross for Tesla shares. Nevertheless, Wedbush analyst Dan Ives downgraded his price prediction for Tesla shares from $300 to $250 and took them off his list of top ideas, even though he still believes they are a good investment. It should be noted that Ives reduced his target price for Tesla to $175 in December after making this announcement in November. At the moment, a widespread misperception regarding Tesla and Elon Musk surfaced. The primary cause of this year's significant decline in the value of Tesla shares is Musk's Twitter endeavor. Despite indications that Musk would resign from his position as Twitter CEO, investors started to worry that Tesla's earnings and sales prospects were deteriorating. Given this, some believe that Tesla's announcement of a rare sale indicates a decline in demand. For customers who take delivery of a car by the end of 2022, the business is offering two rebates. Initially, a $3,750 reduction will be given in early December. Then, in late December, Tesla increased the incentive by double to $7,500. In response, Wedbush analyst Dan Ives said that while EV competition is growing globally, Tesla is beginning to notice demand gaps in China and the US. The camel's back on the stock, he continued, was the price reductions that Tesla implemented. Experts surmise that another factor contributing to Tesla's stock decline is the possibility of a recession in the US this year, which would negatively impact auto sales. Musk earlier predicted that there would be a severe recession in 2023 during a Twitter Spaces chat. According to Reuters, he stated, I think there's going to be some macro drama that's higher than people currently think, and that the state of the economy will have a disproportionately large impact on vehicles and homes. I've stated in early January that demand is beginning to decline, and that Tesla's fairy tale is coming to an end. Even if Tesla delivered more vehicles in 2022 than ever before, it was still insufficient to reach its own high expectations. Nevertheless, after a significant beating to start 2023, Tesla watcher and Twitter CEO Elon Musk critic Dan Ives is sounding a little more upbeat about Tesla shares. The stock is way oversold on fears that the unknown is around the corner. The Wedbush managing director said in a new client note on Wednesday, with $5 plus of earnings power still hittable and the stock in free fall, we do not believe now is the time to bail on the stock, the director wrote. Ives, who removed Tesla from his list of greatest ideas in November, has been harshly critical of Musk's disorganized leadership at Twitter and the aggressive sell-off that started in the latter months of 2022. Tesla's stock has plummeted by around 43% since that call. The main concern currently facing Tesla is that the demand story, particularly coming from China, is exhibiting serious weaknesses at a time when domestic EV competition is growing, with companies like NIO, BYD, XPeng, and others vying for a decreasing share of the market. The weakness of the Chinese consumer, wrote Ives, with China representing 40% of the global growth story for Tesla. This is a heavy concern for the street, which will likely result in more significant price cuts over the coming months to spur demand as a potential pricing war takes place to gain market share in a darker macro backdrop. Ryan Brinkman, an analyst with JP Morgan, appears to agree with Ives, as seen by the significant reduction in his profit targets and price projections for Tesla following the release of Q4 delivery and production data. The question of whether Tesla was ever worth the trillion-dollar valuation it had at the beginning of 2022 is one of the issues with the stock price. Tesla had a fraction of the sales of any of the 12 top automakers in the world, but at its height, its value exceeded their combined worth. It is currently valued at about $399 billion. As one Tesla enthusiast put it got ahead of itself in the near term. Gene Munster of Loop Ventures added, I continue to think that this company has much more potential. Although it might take a very long time to get there, I believe those types of figures will be seen again. That valuation was influenced by Tesla's growth aspirations, which CEO Elon Musk stated in a prior earnings call. Tesla wants to boost its sales by 50% yearly. It acknowledged in October that it would fall short of that year's sales goal. The stock saw a notable increase of 743% in 2020 alone, fueled by Musk's image as a genius who will upend the enormous global auto industry. According to Ives, a significant portion of Tesla's premium is due to Musk. The company was first seen as a disruptive technology company rather than an automotive. Critics of Tesla, however, asserted that a large portion of the company's exorbitant valuation was predicated on Musk's claims about upcoming items, many of which materialized years after they were first announced. The Cybertruck, a Tesla pickup truck that was first introduced 3 years ago with the assurance that production would begin in 2021, is a prime example. Production is now scheduled to begin this year, ramping up in 2024. This puts it years behind other electric truck offers from Ford and the new EV manufacturer Rivian, both of whom have electric pickups on the market right now. It might also lag behind General Motors' upcoming electric truck models. Elon Musk has a pathological problem with the truth, stated analyst Gordon Johnson, one of the most vocal Tesla detractors. When people say he's a genius and innovator, it's based on all his promises he never lives up to, Johnson stated. When Tesla's stock is valued like other automakers instead of based on its promises, the stock's decline will be considerably more severe. According to him, Tesla must construct new plants virtually yearly in order to meet its expansion objectives. However, new facilities in Germany, Texas, which debuted in the spring, is still not running at full capacity. And he claimed that the company's facility in China had to reduce output because of the market's poor sales in light of the COVID restrictions. In the United States, demand has dropped, he added. You may have waited 2 or 3 months to receive one 2 months ago, but today you can have one right away. For the third consecutive quarter, they will produce more cars than they can sell. It is the meaning of overcapacity. Tesla is still by far the biggest EV manufacturer in the world, but established automakers like Ford and GM are starting to compete, while VW in Europe and BYD in China are challenging Tesla in some important markets. Not that things were much better after Musk's rather disorganized Twitter endeavor. Since Musk's interest in Twitter was initially revealed in April, Tesla shares have lost more than 65% of their value, and since he closed on the transaction in late October, the share price has declined by almost 50%. The fact that Musk seems to be using Tesla stock sales to cover a large portion of his $44 billion acquisition of Twitter has dismayed investors. Since his interest in Twitter became public in April, Elon Musk, the company's largest shareholder, has sold $23 billion worth of Tesla shares. Musk pledged during our December Twitter Spaces call that he would stop selling Tesla stock until at least 2024. If not later, he has sold $14.4 billion worth of Tesla stock since April, but he hasn't fulfilled a prior pledge to stop selling the stock. Musk's statement that he is done selling stock has put him in a Pinocchio-like scenario. Ives stated investors want to see him not just talk the talk, but also walk the walk. Dan Ives, however, believes that rather than marking the end of the tail, Tesla's worst year ever should only be seen as a painful transitory speed bump. To learn more, subscribe to Tesla Stock.